James Clunie, you're a fund manager at Jupiter Asset Management. You have long and short positions in your funds. Are you more of an optimist or a pessimist for the global stock market?
I think from here, valuations across the world tend to look high, and therefore I'd probably be more a pessimist than an optimist with a long-term orientation.
Among your short positions are also very popular stocks, for example, Tesla. Are you pessimistic about the whole technology sector, which is very popular?
Not necessarily. The short positions that we have are in individual stocks, and we have about 130 short positions around the world. About 8 of them are in US technology stocks, including Tesla.
We're talking about a lot about the FANG stocks, Facebook, Amazon, Apple, etc. What's the problem of these stocks? Are they overvalued?
Some of them we think are overvalued, and some of them are quite risky stocks. We've seen from past cycles that these are stocks that can fall 50, 60, 70% in market crises. So we feel that overvaluation plus risk is a factor in some of the FANG stocks.
So you look more at the company itself or at the stocks, because the business are pretty profitable?
When we look at a stock, first of all, we look at quantitative measures, things like the quality or its valueness or its stock momentum or its asset growth. Then we look at the stock's valuation, and we look at a discounted cash flow model to try to estimate what it might be worth. We read their financial statements to see the management tone or to see if there are any unusual accounting policies. And then we look at the shareholder register. Who owns the shares? What might they do next? Who is short of the shares? What might they do next? And glean trading signals from that. And a good short would have some quantitative problems, look overpriced on a valuation model, would have some issues in the report and accounts, and would have a weak shareholder register. Then we'd go and short it.
The FANG stocks, they make a pretty big portion of, for example, the SP 500. What would mean a correction in the technology sector for the whole market?
Well, if you look back over historical cycles and look at other times when asset prices were high, 2008 or 2000, what you saw is stock markets begin to roll over, but the most popular, the glamour stocks, still going up for about 6 months afterwards, and then they fell sharply. So in those two cases, actually the end of the glamour regime was the end of the market cycle. They were the last to go. I don't know if it'll be similar this time or totally different, but certainly there's something to be learned from that history.
What are other stress signals you are looking at for the stock market?
So we know that valuations are high and that the total amount of debt in the system is high, and that's a fragility. We also know that there's quantitative tightening in the States. So we see really quite a good setup if you were a negative analyst. But we look at things like turbulence indices, which is a measure of how odd the movements of different assets are relative to one another, as an indicator of whether the market regime is about to change. And currently turbulence is elevated, and that hints at more volatility to come and possibly a change in market conditions. We've got a number of other indicators we look at as well, and they're typically showing odd movements in asset prices. And that oddness, again, could be a hint of a dislocation or a change yet to come.
Do you have a view on the Swiss market? Would you rather short or go long for the Swiss stock market?
We find a lot of high-quality Swiss companies, but the share prices look full or a little bit overpriced on average. So we have a tiny net negative position on the Swiss market, just a reflection of that valuation, but really doesn't look particularly mispriced relative to other markets around the world.